Hey, Danny Ray with Pinnacle Quote Life Insurance Specialist. Just wanted to touch base with you on a topic that a lot of people don't know about. Different types of life insurance. Okay, a lot of people aren't aware that there's 46 different variations of life insurance. Okay, they all fall under three main topics, which is term life insurance, whole life insurance, and universal life insurance. Now, again, each one of these all have different um, built-in options and different rules and criteria. Okay, again, but primarily most people get term life and permanent life insurance, or whole life. Okay, now again, here at Pinnacle Quote, we deal with the top carriers out there that offer every one of these products. Okay, so whether it's term life or whole life insurance or universal life insurance, okay, we will make sure you're fit with the best carrier. Okay. Now, when you're thinking about the most cost-effective life insurance out there, the cheapest life insurance, you're gonna get term life. Term life is by far the most cost-effective way to go. Okay, because again, you're basically covering for if you die in say 5 or 10 or 15 or 30 years, the policy will pay out this amount of money. Okay, term life is normally geared for people in their income years to have people that financially depend on them, like you know, like 25 years old with kids. You want to make sure my visualization of life insurance, and this is how people should look at it, is that when you get term life insurance, you want to make sure that your family is taken care of. Either the last child's thrown his cap and gown up in the air, or you're retiring at 65. Okay, so you want term life insurance to get you there, because the bulk of that's where you get the big policies, big face amount policies at the very low capital basis, because you're looking to protect something for an allotted time. Okay, it's not for your whole life. So the insurance company knows that they're not going to have to write a check after a certain amount. Okay, so that's why they cover you with that. And again, the term life is by far geared for your income years from age 25 to 40. 25 to 65. And when your family, okay, and your kids, they financially depend on you, or if you have somebody that financially depends on you. Okay, now return of premium. Okay, life insurance. It's a term life insurance policy. It's basically usually 15, 20, 20, 25, and 30-year terms, okay, for return of premium. Rates usually about 2 to 3 times more expensive than term policies, but you get all your money back if you outlive the term, every penny. Now, in theory, that's fantastic, okay? And don't get me wrong, agents love when you go to return a premium, because the more money you spend, the more money I make. But is it the right thing for you? I don't have a return of premium pile. Let me tell you why. You're going to lose 3% a year on inflation, okay? On inflation. Every 20 years, inflation doubles, okay? So if you take 3% a year, after 20 years, either you lose 50% of value in something or prices double, okay? Now, again, return to premium, the theory is fantastic. Yeah, I got a 30-year term. By the time I'm 65, I'm getting all this money back. Yeah, who's better than me? But really, 30 years from now, you're going to be losing about 150% value, okay? Or prices will be up 150% from when that money was 30 years prior. So return of premium, in my opinion, I think the best strategy to do, and again, agents love when you do return of premium because that's where they make the most money. Okay, but again, it's the right thing for you. I'd rather do the right thing for you and give you a policy that's going to be most cost effective and give you what you need, than to say something that down the line, you're going to be struggling sometimes to make the payment. Because again, life happens. We have financial cycles. Okay, so my philosophy of return of premium is the fact that I would rather take the excess money that you would pay for the return of premium. Okay, get a 30-year term. Okay, get a third the price. Take 2/3 of that money and throw it in an investment account. You can throw in the safest mutual funds out there, municipal tax-free municipals, and or any kind of fund, safe investments, and you're probably going to double or triple your money over 20 or 30 years. Okay, so that offsets the inflation. So stick that money back in your pocket where it belongs and invest your own money wisely where you want to invest in. Okay, the only time insurance companies make out, the only people that really make out on return of premium is the agents. They make more money, and the insurance company, because they make more money. You take your insurance premiums, they leverage it out to 100 to 1. They buy U.S. Treasury bills or derivatives or things of that nature, and they make sevenfold on your money. Okay, and they throw you a crumb. Okay, so just to give you an idea. All right, universal life policies. Again, I'm not a very big believer. They're great when it comes to agents and it comes to life insurance. Universal life insurance, big commissions. Insurance companies love it. Okay. As far as clients are concerned, I don't think it's the best thing for them, depending on the age. And again, if you have an investment objective, if you have some sort of game plan for deferred taxes down the line or forced savings, then yeah. So these products, if you have that game plan, but if you dress it up as like, yeah, you're gonna get life insurance and investments all wrapped up into one, and things are fantastic, it's not the case. Okay, universal life policies, a lot of them vary, but primarily they I look at them as almost like the option arm of mortgages. Okay, back to 10, 15 years ago, when was responsible for the meltdown in the banking industry. All right, and this is in my opinion. All right, where you have breakpoint years that sooner or later that small premium you're making. Okay, and this is I'm telling you this is an example because I've had clients that might have this. Universal life, you want to put more money than the premium is. Okay, if you don't, you just make that small premium payment. Sooner or later, you're going to have breakpoint years. The breakpoint year is how much it costs the insurance company to insure you. Every year after that, the cost of insuring you is higher than the premium that you're paying. Now, where are they going to get the money from? Remember, it's costing more to insure than what you're paying. They have to give that money somewhere. So sooner or later, they start borrowing from your cash value until they deplete it. Okay, that could take many, many years. And once the cash value is depleted, they'll start to take loans off the face amount. Okay, so in some cases, I've had experiences with this with clients that had this. I've had clients of mine that died at 87 years old. Okay, got a universal life from a different agent decades before that. A $250,000 policy. They got I think they got like 35 or 40 grand because of all the excess loans that were taken, off the policy. And again, universal life, big commissions on agents and life insurance companies love it because again, they take your money, they leverage it out, they buy very safe investments, and they make 600-700% on the premiums that you pay. Okay, so it's a very good lucrative deal for them. Okay, now again, going back to life insurance, how much you should get. Again, I've reiterated it in a video a while back that you want to get enough where when it comes to term, it enables you to get. Again, if you have kids under 5 years old, you want to have 15, 20 times your income. If you have kids, anywhere from 8 to 12 years old, you want to have 10 to 15 times your income. Okay, but rule of thumb is usually 10 times your income. If your kids are all out of your house and just you and your spouse, okay, and you pass away, you want to have bare minimal at least 5 years of your income. Okay, because if something happens to you, you're the primary breadwinner. You want to make sure your spouse is taken care of. And make sure that mortgages are taken care of, any debts that you have. Again, if you're younger, college tuition. But primarily, I always look at replacement of income because that really is what happens. That's what pays for everything. Without your income, there is no college tuition. There's no debts being paid off. There's no mortgages being paid. So I really go around the fact that how much your income you have to replace. Okay, and you got final expense insurance. Okay, funerals usually cost 10 to 12,000. Okay, so that's something that you get a guaranteed. You get a guarantee, or I'm sorry, a final expense whole life policy, where you have it for your entire life. Normally, this is geared when you retire. You want to make sure you get the final expense covered, loose ends covered. This way, when you do pass away, it's not falling in your child's lap or your children's laps at the worst possible times. Normally when people are passing away, they got kids in 30s, 40s, or 50s. A $10,000 to $15,000 bill could put, in some cases, them in a financial disarray, especially if they're living paycheck by paycheck, where most people in the middle class are in this day and age, anyway. So nobody's got earmarked $10,000 to $15,000 earmarked for somebody else's funeral sitting in the bank account to gladly give away. Okay, I've had a lot of stories that when parents die, me being one of them, that as far as covering expenses and everything else, you can slap it on a credit card, but then you're taking years to pay that off. So it's our responsibility to make sure that when we pass away, if we have the financial capabilities to make sure that we can pay for something that offsets that, so it doesn't fall in our kid's life. Okay. Now again, going back to what kind of insurance you should get. I mean, term life insurance. Okay, if you're 25 to age 65, and you got people that depend on you financially, term life insurance is really the only game in town. David Ramsey, he flaunts it. Okay, Susie Orman as well. She'll always tell you to go to term. Okay, also, and it's the most cost-effective way to get life insurance, to get the coverage that you need. Okay, it's the most affordable policies out there. And they also offer, if you're very healthy and you're young, no exam life insurance policies. In this day and age, some carriers actually have it very competitive, if not better priced than some of the fully underwritten policies. Okay, and then again, you got the guaranteed issue policies where you have health issues. They don't ask any questions. They don't ask you. You don't care if you smoke or not. They'll give you a policy. These policies usually have a 2 or 3 year graded period, which means if you die in that allotted time, all the premiums will be refunded back to your beneficiary plus 10%. Okay, so you get more out of it than when you put into it. Okay, and again, that's pretty much basically my input on types of life insurance. Okay, again, return of premium, not a big fan of it. Okay, because inflation eats away. You're not making any money off of it. Okay, so the money you get back is usually half the value because of inflation. Okay, and universal life, again, I'm not a big believer in mixing investing and stock and life insurance. They got a stock market. They got a huge stock market for investing. Okay, take your pick. When you mess with life insurance, the only one that really makes out is the agent and the insurance company. And I hate the fact that I just told you that. I'll probably get a lot of hate mail now. I'm just joking. But anyway, any questions, give me a call. I'll be more than happy to explain this to you. I'm always make time. You can give me a call at 855-380-3300. You can reach us on the web at pinnaclequote.com. You can click on Let's Talk. That'll schedule a time to give me a call, and we can sit down and discuss. I'll do a free policy review for you as well. Okay, any quote I give you will be pretty much dead on. Okay, unless there's some health issue you have that we don't know about yet. All right. Also, you get an instant quote. Click on instant quote. Okay, and you'll actually see the top carriers out there within seconds. Okay, within a minute. All right, you'll be able to see the carriers that would bid for your business. Okay, and also there's a chat box at the bottom of the page. Okay, that I'm available pretty much all day long for any questions that you may have. All right, so that's my input on options for life insurance, different types of life insurance. I hope this helped you. And again, any questions, feel free to give us a call. And I hope you guys have a great week and be safe.